Welcome back, everyone. I am Tim Bohen with StocksToTrade, along here with Mike Huddie, and we're going to be talking about a lot of stuff when it comes to trading on these videos. And as always, if you want to really kind of take that next step of your trading education and get really in depth, go down to the links below, check out the StocksToTrade team. It's a great one-year program where Huddie and I work together to shortcut your path to success. It's an in-depth program, webinars every day, chat access, email access, everything archived for review after the fact. It's a great way to learn trading. Check out the StocksToTrade team. So for today, we're going to be talking about something that's kind of interesting. If you watched a lot of these videos, you know Huddie is a little more of a short bias trader. I used to be, and then I've kind of evolved as I've gotten older into a little bit more of, and the bull market, I've kind of flipped to a little bit more long bias. But it's kind of neat today. This is actually a chart from today, a stock literally from today as we're recording, that oddly enough, Huddie and I agree on. He actually just told me Tim Grittani's in this stock. Tim Grittani, if many of you know, is primarily a short bias trader. Evidently, he's long this stock. So what we're going to talk about today is why. Why does everybody see this as a good potential long setup?
And what's cool is, I didn't talk to Bowen and I didn't talk to Grittani, and we didn't share notes about, whether we were going to buy this stock or not, but we all have the same foundational knowledge. We're all cut from the same cloth, so we all see the same thing and recognize the same pattern and the same variables that attribute to why this stock might be a potential good buy, or on the other hand, a terrible short. And so, as a short bias trader, the reason I don't long is not because I don't know how to, but I find so much more consistency short selling that it's not about nailing every single thing in the market. It's about nailing the things that I trade well, and once I'm in trade, I handle my emotions well, and I understand what to expect out of the stock. So when we come into the coronavirus stocks, AIM having a loose correlation to the coronavirus news. I believe they're on some interview this morning.
Yeah, so the ticker we're talking about is AIM, and if you want to follow along at home, we're recording on February 12th, 2020. But they had a press release today. Yeah, I mean, they're kind of like, we're in cancer. Now they're kind of trying to capitalize on the coronavirus play with a PR. Plus they were on Fox News and Cheddar, which I know sounds sketchy, but it's also penny stocks 101. Hell, probably if cryptocurrencies come back, they'll probably pivot to cryptocurrencies. But the fact is, their CEO was on major media talking about I think it's some sort of treatment for the coronavirus.
Right, and I honestly didn't even watch the interview.
Yep, neither did I, yeah. No, I'm not watching a penny stock CEO on TV. I got better things to do.
Right. The sign was, regardless of interview or not, this volume was insane for what this stock is doing, and we'll get into that in a sec. But part of the reason that I'm watching these coronavirus stocks, is because that's what's hot on the macro sector. In terms of macro events, it's in the news, and regardless of whether any of these companies are going to have the vaccine or whatever, they're all moving in correlation with all this hype. And that creates a lot of momentum, sector momentum is what we call it, and that is often a very strong catalyst on its own.
Yeah, and what's great, and please keep in mind, as traders, we're not, whether long or short, we're not evil. It's not like we're like, ooh, get to capitalize on people getting sick and dying. But remember, some of the biggest things that drive these stocks is fear, okay? And, if you're looking for a hot sector to really grow your account, look for the fear type stuff, whether that be natural disasters, wars, famines, or viruses. And, I always say, I want the best for everyone. Huddie wants the best for everyone. But these stocks are going to move no matter what. You might as well capitalize on it. So, most likely by the time you see this video, coronavirus will have faded. But these scary plays really create great opportunities.
And so generally, like I said, I'm not looking to buy these stocks, but whenever these stocks start running, I am always, winding up my backhand for the short. And that's usually a process of waiting 1, 2, 3, 4, 5, week or 2 weeks at a time for a stock to truly extend itself and go crazy.
Yep.
And generally what I have to at least acknowledge in the beginning is where's the breakout level?
Yep.
And what is going to look like extension from that level? And so AIM being at $1 is something that I'm kind of realizing now for maybe a short 4, 5, 6 days from now. I guess what I'm trying to say is I still recognize the breakout charts regardless of whether I play them. Now the reason I am interested in playing coronavirus stocks is because I've actually had a bit of good fortune playing these corona-correlated virus stocks for the past 2 or 3 weeks. I made quite a bit of money just buying the breakouts on the ones that have the low share count, the vague affiliation with the news, and the nice looking daily charts that signal things might go higher.
So let's jump over to the daily chart. And you can see, so this is roughly a 6-month chart-ish back to last fall. And now you might see some of these candles and be like, what the heck is up here? This is a reverse split stock, which also puts it on, that's another reason it's on everybody's radar. So, when the stock jumps up like that, it's just a reverse split and then it fades all the way back. So remember, we do a lot of videos discussing reverse splits, but then that puts it on our radar, and you can see it was flatlined forever and now starting to gear up.
And now this is pretty much only the part of the chart that I really care about due to that reverse split. The nature and the foundational makeup of the stock, the share count, has been augmented since October to a share count of roughly 3 million shares outstanding. Now, before October, that number was different, and because of the reverse split, they were able to lower the share count to a desirable number for day traders.
Exactly,
And so the chart before this is a different chart with a different chemical makeup, and so what I really care about is what it's done since October.
Great point, And again, we do a lot of videos on reverse splits. If you're new, it's kind of a confusing topic, but that's a great point in, to me, I agree. Once that reverse split happens, it kind of, for lack of a better term, reboots the chart. And you only should be really looking at the area since the reverse split, because if you're trying to do support and resistance pre that, it's just all jumbled. It's a mess, so.
And then as we get more into the chart, the days we really care about are the days that it's trading massive volume. And we can just see that, for the most part, October, November, and December, it wasn't trading any volume. But as we inch into February and the coronavirus news starts coming up on different headlines or so, you start to see the volume accumulating. Where we're trading not just 50,000 shares a day, we're trading 2, 3, 4, 8 million shares a day for the past month, and creating this base and this range within the stock. And that's something that we get really interested in, because this is where the short start shorting pops and the long start buying, and we get volatility.
And then the other great thing, just from a technical standpoint, you can kind of draw a line across there. So if you draw a line across that 125 level, you can see that is exactly what we call that resistance level. You can see 3-4 times the stock tried to break that area, that resistance, break, can't break it. Then what happened today is that resistance broke on high volume. That gives you a high likelihood that resistance will now become support because the volume pushed it through that level. So again, that's another reason it's on our radar, because even if the stock falls, odds are it's probably going to fall back to that previous resistance level, trickle sideways, gives you an easy exit, you take a small loss, no harm done. So now we've got the intraday chart. You can see in pre-market, good solid volume, I think 3 or 4 million shares. Go back to that 125 level kind of across here. In pre-market, it broke through that, started to base, and then kind of break down your thought process.
So it's up from $1. The previous day's close was roughly $1. And at this point in the chart, it's not really massively extended. It's not like it had some pre-market run where it ran 300%, and now it's going to fail at the open. So this is something I have on my list as a potential long, because it's still near its lows. I feel like if I do take a position, I'm probably taking a position near support. And resistance would be somewhere much higher. We'll see what happens in the next 2, 3, 4 days. So I'm looking at this chart and I'm thinking, okay, somewhere between $1 and $1.30, that's the 20-30% run that it's already had, and that's where I'm curious to be long. I think the more extended it gets, the less I want any kind of piece in it, because I think the risk reward goes less in my favor the higher it goes.
Exactly.
So coming today, I see one stock out of all my stocks on my scanner. There's just one stock that's gapping up on coronavirus-linked news, which has been hot, and it's got a decent gap up. And so the first thing I do is look into the news, I look into the share count, and I confirm certain things. I want to make sure that there is a low share count on this stock. I want to go into the dilution and see if there's any landmines within the filings that I can point out. Which for AIM there are a couple landmines.
Sure.
And the landmines aren't necessarily the trump card. But sometimes they do give you tall-tale signs to maybe avoid something long.
So what are these? What are the landmines you saw?
So, for AIM, it did have 3 million shares outstanding, but there was I think it was 8 million shares of dilution at 99 cents. These were warrants and common stock, I believe.
Okay.
And so, those insiders are in at 99 cents. So when the stock is opening up at $1.30 and spiking to $1.50, my initial gut reaction is, if these people want to sell, they're going to stuff this spike. And it's going to have some kind of pullback. And depending on what retail traders do at that point and what the investors are going to do, we can't really foresee what happens next.
Sure.
But what we can predict is there might be excess selling pressure because of these insiders. So generally, I'm staying cautious, I'm staying patient. I don't really want to rush into any kind of morning spike because I think the odds of it getting stuffed are probably likely.
Yep.
But I still recognize the breakout chart, and I understand that $1.25 previous resistance should now become support. And so I do want to see how this starts to react around those levels. The day low in the morning was $1.25, and then we spiked to $1.50. So fine, there is interest in the stock, and we poured a lot more volume in.
Yeah, I mean, you can see. Well, it's probably hard to see on YouTube, but I mean, this is a 5-minute candle chart, and that opening candle was, well, the second candle of the day was over 3.2 million shares. So it basically rotated the float in the first 10 minutes of the day, which even if there is that was potential dilution. I mean, that's gobbling up a lot of those shares, even if insiders are selling into it.
So yeah, if they are unwinding their position, then yes, they could completely unwind into this volume. And if they're not unwinding into this position, then short sellers should be very nervous in their position, as well as, dip buyers might come in and start buying the stock. So my whole goal was to get some kind of entry as close as I could to the breakout level, like we always talk, but also as close to what support potentially could be. And support, like we're saying all morning, it should be around that $1.25, $1.30 level. So the day low is $1.25. So as we start dipping down to $1.30, kind of mid-morning market, I'm thinking that's some really decent risk reward right there. And at that point, the stock was trading 20 million shares on the day. The stock hasn't traded 20 million shares on the day, and not in the part of the daily chart that we care about. And fast forward to where we are right now at this time of day, and it's traded 40 million shares on the day. So that's the kind of stock that I think has good odds of maybe being the stock that everyone has eyes on today. That's a stock that might have continued strength into day two. It is the most volume, it has the biggest percent gain, and it has a catalyst related to the macro events. So I don't mind taking a position at $1.30, $1.33 average, risking 3 or 5 cents, and seeing if we can maybe have a strong close and then even a gap up into day two and just take that as a day trade.
And I think what I love about what you just did there, and I think this is something that you really need to focus on is, and I love what Huddie did there, because you've seen me do it in these videos where I tick off things. I'm like, what are the reasons to be in this stock? I mean, if you're a new trader, which I'm guessing you are because you're coming to YouTube, I mean, you gotta have those 5, 6, 7 reasons to enter a stock. I mean, you can't trade everything. You can't trade 10,000 stocks a day. You can't trade 1,000 or 10. You probably, depending on how much buying power, you might not even be able to trade 2. But if you can do what Huddie just did there, crazy volume, news, hot sector, broke through resistance, now has support, all of these things, that is a trade you take. Okay, that's when you risk your hard-earned money. Okay, whether you got $1,000 in your account, 10,000 or 100,000, your goal is to protect your account and grow your account over time. So we'll see how AIM plays out today. You can definitely check it again on February 12th, 2020. Let's see how it does. But the biggest takeaway I want you to take away from this is have that process, have those criteria that make you say, holy crap, there's 6 reasons to buy this stock. There's 6 reasons to short this. Don't ever just buy a stock because it's the top percent gainer. Oh, I'm going to chase this thing up. But if you have these technicals, these fundamentals, and these volume criteria, that's what creates a good setup. So if you want to learn more about this, check out the Steady Trade team. I mean, this is exactly what we do in twice daily webinars. I think the best way to learn this is through repetition. I'm kind of a meathead. I make meathead analogies. You can't bench 300 without putting the reps in at 100, at 125, 150. And that's what we do in the Steady Trade team is we just go over this stuff, and that's how you get better at it. So thank you again. And as always, be sure to like and share these videos, and please ring that bell to be notified as soon as the next video hits. We go live, we post several videos a week, and we want you to be there when they hit.